Alright guys, welcome back to my channel. I believe you have been learning one or two in my videos, and I know that if you can continue to watch my videos, you are going to learn. You are going to learn because I actually take my time to learn this. So in this video I'll be explaining what I call dealing range. Yes, dealing range, it is very important. This means that you're actually moving towards taking trades if you actually start to know what a dealing range is, and it will make trading a bit easier for you. Yes, you won't be looking at it, just you won't be taking trades from any random places. You will know where you want to stay to take your trade. You'll be able to wait sometimes to take trade. So now, without further ado, let us start. So I said dealing range. So what is dealing range? According to me, I don't want to read anything. I don't want to go and cram anything that okay, this is how it is written. But for me, what I see as dealing range, my dealing range is that particular area that I map out that I'm going to take my trade, and it used to be around between a swing high and a swing low on the higher time frame. So I'm going to be drawing the chart now artistically so that you can better understand it. So before I start, let me explain this. I'll be using my edge in the market, my strategy to explain this. So for me, I deal with 4 hour time frame. Yes, I deal with 4 hour time frame. So that is where I used to look at my dealing range or my buyers. Now on the 4 hour or H4, what I want to see is a break of structure. Please, I want you to pay attention. Is a break of structure. That is what will give me my dealing range. Yes, a break of structure or a change of character. So now, if I can identify on the 4 hour time frame my high and my low, I'll now look at the next leg. Yes, the next leg. What does the next leg do? Does it break structure or it change character? It breaks it broke structure. Yeah, it broke structure. And then the other leg, what does it do? It also breaks structure. So this actually says that I have a dealing range. And what is that dealing range? My dealing range is going to be here and here, because I said before that these places are strong low and strong high, but because it's an uptrend, this place is not very important. This is where is important. Yes, so now my dealing range is going to be between here and here. Why is it like that? Because this low is strong and I did not expect price to break below. Yes, it's strong. I do not expect price to break below. What I expect is that price can even come here and create reaction and either sweep liquidity. When you see the body of the candle couldn't close below, it's just ordinary week. That means price actually swept liquidity and then continue its movement to the upside. This is a strong low. I did not expect price to break below. Yes, I did not expect price to break below, but I'm not in control of the market. Market could do whatever it wants to do. If it breaks below, I'm less concerned. It means that price has changed its direction. So what I'll do is that I'll change my bias. So now what you want to do is you want to take your trades around from 50%. Yes, 50%, half of this range. You want to take your trades from there. You want to take your trade from half of this movement. So you want to look for opportunities around here down to this side. You can actually be aggressive or you use a confirmation. It is better to use a confirmation most of the time, especially if you're a beginner, because the moment price weak below this low, it means that you'll be stopped out. So it is better when you use confirmation entry. Yes. So what I want to do now is that I want to take my trades with confirmation around here. and I want to focus, or I want to look for any reactions or reversal point around this area to put my take profit. Yes, that's what I want to do. My take profit could be around here. It could even be lower because this is a higher time frame. It might take time. It might take weeks for this thing to play out. So I want to look for the nearest liquidity area to put my take profit. And my stop loss is going to be below the low of the recent low around the lower time frame that I use. Yes. So the same thing applicable to the downtrend. When price actually change character to the downside, it breaks below this low that we see as our strong low. It means that price has changed its bias. Now we are actually, we are partially in a downtrend, partially because we needed confirmation. We need confirmation rather. We need confirmation to be able to know that certainly price has changed its bias. So the moment we see something like this, price comes and couldn't come and break above this space again, and then it creates another low, it means that price has finally changed character. So now we have a confirmation. This is a change of character, but this is a confirmation. So the moment price breaks again below the recent low, it means that price is more interested in going to the downside, and then it's now focus on going to the downside. And this thing would happen couple of times. It will happen over and over and over and over again. So it is very, very important we know our dealing range. Your dealing range can be between a particular time frame. It could be 1 hour time frame, it could be around 1 hour time frame, it could be around 30-minute time frame. But for me, it is 4 hour time frame. And it is better it is a higher time frame because the higher time frame is stronger. Yes, it is stronger. So how do you take trade from a dealing range? Let's let me just use this as a bonus. When you can identify the movement of the market, the general movement, and this is an uptrend. So what you want to do is that there is a particular point. This is a strong blow, a strong blow. It is very strong. These places are bound to be broken. Yes, what you want to do now, you are not going to look at all this past information, the past information. You are going to take the recent one. This is the recent one. You want to take it as your dealing range. Price has actually break structure. So this is a strong blow. This is a very strong blow. So you want to map out that area that causes the break of structure. This is the area you want to map it out. You want to wait for price to retrace back, retrace back to that area. Then you want to go to a lower time frame, or you want to be aggressive. Maybe you put your entry here and then your stop loss here. But for me, I prefer to be conservative, to wait for confirmation. And what I do is that I go to my 15-minute time frame. I look for a change of character. Market is very fractal. What it does on higher time frame is going to do it on 15 minute on lower time frame. Yes, it's going to do it on lower time frame. So for me, the 15-minute time frame is my entry time frame. I don't like to refine my entry too much. Yes, I don't like to refine it too much because lower time frame, gives more of false break of structure or false confirmation. Yes, it gives more of false confirmation. So I don't want to use much lower time frame. I want to stay on the 15-minute time frame and then see a change of character. Once I see the change of character, it means that whatsoever happen on a lower time frame, it's a confirmation. Like it's a way of telling you that, or preparing the higher time frame, because when it gradually happen on the lower time frame, it will start forming the higher time frame gradually. Before you know it, the same thing will happen on the higher time frame as well. Please don't mind the way I say it, just let us learn and grab something from this thing. So once I see the change of character on the 15-minute time frame, I want to look for an institutional reference point. This thing I call institutional reference point. I'm going to make a dedicated video on it. In fact, it's going to take us some time to explain it because it is very, very important. You can't trade, you can't know how to trade, you can't trade effectively if you don't know what an institutional reference point is. And we have 7 institutional reference points. So in my next video, I might probably be giving you the institutional reference point that we have, so that you will know where to deal with in the market. You see all these professional traders, in fact, companies, or what's it called, hedge fund, all these institutions, they are not just taking trades from random places. They're actually taking their trades from anywhere, and whenever they take any action, they leave a footprint, and those footprints are the institutional reference point that we are going to be looking at later in my videos. So now I locate an institutional reference point, and I want to place my order there and put my stop loss below the low. So the same thing applicable to downtrend. Yes, to the downtrend, I'll do the same thing, but this time it's going to be at the upside. That is the difference between it. So I look for an institutional reference point like a fair value gap or an order block. Then I might actually look out for confluence, like two institutional reference points colliding together. Then I want to put my entry there and my stop loss below the low. And I expect something like this to happen again. So you can see price breaks, starts going to the upside. Price could even come down again, and then price would go. So if it's a higher time frame, this area is going to take time before it plays out. It's going to take time. So I believe you actually learned something from this video. And if you learn anything from this video, I want you to give it a thumbs up. Follow this channel, because I know this channel is going to be helpful for you now and in the future. And I don't know who needs my type of teaching, so you want to share, like, and follow this channel. Thank you.